Shall we? Yeah. Hey, good morning, Sudhin. Thank you so much for joining us today at GFF 25.
Thank you for hosting me. Thank you.
Hi. So for today's talk, I mean, we really wanted to focus on the growing role of AI in the world of MSMEs and corporates in the B2B space. Because as you know, Vayana has been focused on this B2B space and MSME space for quite some time.
Yeah.
And we are really excited about how AI is making a difference in the way businesses actually perceive MSMEs, FIs perceive MSMEs, right? And a lot of this is based on the trust because, traditionally the problem has been that MSME is a space which is hard to address in credit because information is sparse, right? And we are seeing changes happening there, not just from what we do in Rubix and other parts of Vayana, but overall AI coming in and increasing the trust factor in the ecosystem. So what have you seen in your time here and in all these initiatives that you have been a part of?
No, you're very much right out there. This AI tsunami is going to be very, very helpful, especially in the finance and banking areas. And especially seeing the size of our MSME ecosystem, there are more than 60 million MSMEs. They're nearly about 2 lakhs DIPP registered startups and increasing all the time. I think the role of AI, especially in reg tech, regulatory tech, in fraud, in fraud control, as well as the digital monetization aspect. Because what is happening is all these payment platforms, lending platforms are generating huge amount of data, which can now move from just analytics to inferencing, reasoning, and decision making. So these next generation platforms, which are going to be automated, autonomic, and agentic, is going to be a huge benefit for the entire ecosystem.
And that's fantastic. I think the point you make about data, that indeed is important because I mean in Vayana we have Rubix, which is the purveyor of data for so many MSMEs. We have I think a few lakhs of MSMEs whose data lives on our files. And in fact, one of the things we have seen, I mean something that Vayana has always believed is MSMEs need to become credit ready. I mean, before you can actually extend credit. And one of the uses of AI we have seen is being able to use the generative AI part of it to actually have MSMEs query the report to know more about what this report means, what that score means, and all of that stuff. And that is helping them, probably inculcate better habits in terms of how they use the money and what they do with it and how FIs will perceive them going forward, right? What have you seen in how all of this links back to FIs driving their decisioning and especially their credit decisioning with respect to MSMEs and using AI in this process?
So I've already built some AI models that can add to the credit score, right? So this is based on alternative data transactions, like maybe your utility bills, your digital transactions, your other related transactions, which can actually increase your trust index. Ultimately, you want to have, the MSMEs want to have a higher trust score so that NBFCs, banks, and financial companies can lend to them. So I think the role of AI becomes very, very important because there are so many grants and schemes, and recently now there was the newer RBI regulations that is going to be very helpful for the credit to MSMEs and priority sector lending. So if AI can match all this, build the model, build up these alternative data credit scoring, and help the MSMEs and startups, I think that's going to be a very, very good market, which will further bring in the trust. Even, and I've seen from my own experience that using AI and digital transformation has increased the overall GRC, right? The governance, risk, and compliance. So I think this combination is perfect with the role of AI coming in. I remember during as head of innovation in State Bank of India some years back, we benchmarked our core banking systems at 24,000 transactions per second. 1.5 billion transactions a day, and today it's covering more than 500 million customers and 700 million accounts. So we have all the data. We have the GST data. We have the TIPP data. We have the MSME data, at both at a central level, government level, at a state level, at authority level, at a regulatory level. So if we can now use AI to just match and create these newer models, which will now align to instant decisioning from the time the regulations have been made by the regulator. So that's where the latency or the transmission of the credit can improve.
And that, I mean, what you raised about the variety of data that is now available for something like an AI to actually make decisions, that's really a fantastic point, because that's something we are seeing even, in real life with corporates that we deal with, and how they are looking at collections now vis-a-vis how they used to look at collections, right? Because of how things are changing instantaneously now with tariffs coming in or something else, risk profile of their receivables portfolio actually changes daily, right? And having an an AI based approach, a data based approach to be able to map that risk on a daily basis to improve your collection efficiency, improve your risk mitigation, right? All of that is definitely striking a chord with corporates the way we see it. And is that your experience as well in the when you have talked to these corporates yourself?
Oh, absolutely. Just I recently read that the Bank of England has, with the UK government, they have immediately made available a 20 billion pound line of credit to ride over this tariff crisis, right? Because everybody gets affected. I think the same way with the rise of AI, with now this data available to regulators, to authorities, to corporates, to NBFCs, to banks, to entrepreneurs, to MSMEs, right? So this entire ecosystem is going to be a kind of a digital transaction record, right? With billions of transactions getting generated, wherein you can now do the new modeling. You can now, with the help of Gen AI, and you mentioned Gen AI, you can now talk to your applications, you can talk to business systems, you can talk to data, you can talk to technology. Right? So the time to develop these next generation platforms, which I believe are going to be automated, autonomic, and agentic, is a terrific opportunity to start building the level 1, which is your business and rules, level 2, which is your reasoning, and level 3, which is your decision making.
And that leads to a good point that now, given all the AI-enabled, development tools and frameworks as well, it's much faster for us to demonstrate value and identify that product market fit, as we say it, which used to take months, now actually takes weeks, right? In fact, we have seen that firsthand within Vayana, right? And that has, of course, been a game changer, right? But some corporates are still concerned, and I think there are a lot of people out there who feel concerned about how the regulator feels about AI, and how supportive that is. And what has been your experience with the regulatory part of it, since you come from a strong GRC background, right? And how have you seen AI and regulations really play out?
Regulators have always been very, very favorable of emerging tech, emerging models, right? Back some years back when we built our YONO application, the You Only Need One, which is the world's first autonomic lending application in the State Bank of India, right? We saw that our total operating cost for giving the loans, digital loans, has now gone down from 60% to 20%. And that benefit is being passed on to the customers, to the borrowers, who get now a discount if they come through the app channel, right, the super banking app channel. They get a 15 to 25 bips discount on the interest, on the home loan interest. And home loan is a very long gestation loan, right? It's 15 years, 20 years. So imagine this huge benefit is going to also make the regulators feel very happy because the total cost of ownership, your operating costs, your time to get all those documents together, here it's all automated because of the jam, right? You have your Jandan, Aadhaar accounts, and mobile, right? So I think this is a very, very big benefit, and regulators all over the world are now convinced about the ability of AI, right, across many such use cases. And the biggest benefit of about it to reduce your operating costs is a huge benefit which can be passed on to customers.
All right. And in all of this, along with the adoption of AI, that there's been a lot of debate about whether LLMs will work for everybody, whether you need to go the SLM route, and there's been a lot of pros and cons called out for all of these things. What has been your experience on when an LLM, when an SLM, and especially with the credit kind of scenarios that you deal with, whether SLMs have a really key advantage over the current state of LLMs, or was this a matter of the past when LLMs were still catching up? What have you seen?
So from my experience, India is very good in the application innovation side. We may not be that good in the deep tech infrastructure, the GPU infrastructure, or building these LLM models. Because for your, let's say your trade finance app, or your ID app, right, or the other businesses that you'll cover, your payments that you'll cover, the use of an application-specific hyperparameter is all that is required. Right? You don't need all this huge, 100 GPUs or 1,000 GPUs or all these super clusters. And now you are using the latest technology stack like low code, no code to accelerate your application development. You're using data pipelines, which is ETL plus data science plus statistics, right? They're using MLOps, you're using Gen AI, right? You're using now these application-specific hyperparameter models. So I think this acceleration, just as you have accelerated computing, right, with the NVIDIA latest chip Blackwell holding about 208 billion transistors on a single chip. So everything is going to get accelerated, right? So I think this role of the entire technology stack, the deep tech stack, is going to not only reduce the costs, but increase the digital monetization, the plug and play models, right? And simply increase the credit and a lot of other related benefits to the people who really need all these resources.
And that's fantastic, because I think that just adds to accessibility of these technologies for the broader groups, right? And that definitely is a great thing. And in the same tone, like, have you, what has been the experience with inference as a service, just to make it easier for everybody to access these technologies rather than having to build it all themselves?
So, in India, we built the world's most advanced core banking system at 1.5 billion transactions a day, right? And there's just one bank, the largest lender in the country. So right now we're doing analytics, right? So we are slicing and dicing the data. So now it will move to inferencing. Inferencing means that you can now, because of this transformer model and this Gen AI attentive mechanism, it means that by talking to data, you can now build the newer models. Everything is now become model driven, right? So your reasoning, your decisioning, your attention mechanism, your transformer model, all this is going to able to connect to all these billions of records across core banking, payments, your KYC, your trade finance, all these huge number of transactions can be now crunched. And for example, a straightforward win is that there are so many central government guarantee schemes. Mm-hmm. There are so many state schemes, right, for the MSMEs and mid-market companies, right? So now your AI model can now match all this, right? It's being done now, but it's more like a rule or intent-based, right? Now you're moving on to the next level, which you're building these autonomic decisioning, reasoning kind of complex systems, which will really be able to drive a culture of accelerated lending on a scale never before. And all this, reduction in interest rates, right? The reduction in all these, the acceleration of policies to help the credit offtake, especially to the needy people, is going to be with AI, armed with AI, is going to, transform the society at a level where we will truly be your economic superpower very soon.
Understood. And in your experience with the entire data residency part of it, because in India, especially with financial data, it is very important the data stays within India, right? And a lot of the providers currently are still in the process of making that happen. So, what has been the experience with all of? How does that play into these decision making that you're seeing?
So I beg to differ, in terms of the concerns, because it's the first time that all these Gen AI players, like OpenAI or other players, are publicizing what they're going to do with the data. Right? Previously, I mean, if you asked me the same question 5 or 10 years back, nobody knew anything about GDPR or DPDP. Now we have the India Digital Act also. Secondly, we can always make use of the synthetic data, right, which masks the confidential nature without affecting the analytical or influencing properties, right? So all these tools are now available, right? Yes, we have to be very careful about the local residency, about access to these systems, right? How our teams can develop these applications and put the guardrails. That's important. But those guardrails are also published, right? So that's a good start. And I think using these synthetic data models, newer models, using the reasoning layer, which completely kind of transforms your transaction layer, right? I think that's the right way to go. Yes, we have to put up the financial guardrails and adhere to the DPDP India Digital Protection Act. But from my experience, I have used these synthetic data models and they work perfect.
Amazing. Thank you so much, Dr.
Thank you.
Asudin, thank you so much.